Thank you very much. My name is Costas Apostolopoulos. I am the head of the unit regarding the financing tools in the Managing Authority for Rural Development Program. I would like to thank the organizers for giving me this opportunity today to present in summary the Rural Development Guarantee Fund, of its characteristics, of its benefits for the rural economy and also for the farmers and processors. So, what is Rural Development Guarantee Fund? It is a financing tool. It is developed with resources of the Rural Development Program as well as the so-called Juncker Plan, the European Fund for Strategic Investments, and its management is given to the European Investment Fund. So this program gives 80 million euros and 20 million are given by the European Fund for Strategic Investments. Therefore, after an invitation of the EFSI, 7 banks have been chosen that participate in this fund and could give loans through this tool. Cooperative Bank of Karditsa of Thessaly, Piraeus Bank, ProCredit Bank, National Bank, Eurobank, as well as the Pancretian Bank. The participating banks have developed a portfolio of loans, and the fund covers the biggest part of the expected losses, which means that if there is some mistake or a loan is not paid back, we give the guarantee to the banks to the biggest part. Now, which are the benefits from this fund for the agricultural economy? We can have 6 times more investment with 80 million euros. Therefore, we are expecting a portfolio of 480 million euros with loans. It improves the competition in the financing market for the agribusiness sector. 7 participating banks. The banks recognize the specialties of the agribusiness sector and they know how to do financing in this business sector. Now, which are the benefits for farmers and processors? They have reduced collateral, which according to the agreement signed, they are 50% reduced or even 100% reduced. We have reduced interest rates from half until 1.25 percentage points and also reduced administrative fees to 20%. It is also has a great range of eligibility for the expenses, because usually farmers cannot use that money to do those things, such as buy livestock, for example. And recently, we have also revisited the tool in order to allow businesses of the agribusiness sector, farmers, processors, etc., to get loans for working capital to the specific businesses that have been hugely affected by COVID-19. Therefore, a business can get working capital without to submit a business plan or to come and explain to us how they have used that money. So it gives liquidity to the people who have been affected and their income has been reduced by the recent pandemic. So we are listening some myths and some stories. One of the basic myths is that the fund can give collateral to beneficiaries of improvement plans in order to get the prepayment. No, this is not right. Our fund gives loans not only to beneficiaries but also not to people that are not beneficiaries according to the RDP, to the Rural Development Plan. Now, the resources of the Rural Development Plan are used as a guarantee, as a collateral in case the person cannot serve the loan. Another myth is that these loans do not include a subsidy. Yes, the loans include a subsidy, and this is calculated as a gross grant equivalent, so to say. Because if we didn't have this grant, we couldn't give those very good terms. The fact that the business have access to financing with very low collateral, with very low interest rates, it is because those loans include that grant, and that subsidy is taken into consideration. Now, if someone wants to combine the loan with a grant or with a subsidy, this is the, of course, choice, and they may have a cut down on the grant. Therefore, we couldn't have such a loan without combining it with a subsidy or a grant. Now, the procedures, there is a myth that the procedures take a lot of time. This is not true. Less than a year of operating the fund, we have already approved, disbursed and implemented very good investments. And if you want, you can go to our webpage and also to the social media of the National Agricultural Network and watch a video that was created by the FI Compass, which is a joint venture and partnership of the European Investment Bank and the European Commission with Greek farmers that have received funding from that tool. Now, let's say what is happening with the implementation, which of course is related to the demand and supply. Right now, we have more than 1,045 unique applications, 88% of which is about agricultural holdings and 10% comes from new farmers. 37% combines that loans with a grant, while 20% includes also working capital. So this demand refers to 85 million euros, 63% is about agricultural holdings. Now the financial, let's say, width of the holdings are small holdings, and they have more or less 25,000 euros. Usually we have medium-sized holdings, so to say, and the majority of the applications is asking 30,000 euros for farming and 50,000 euros for processing. So you understand that there is a large demand for, let's say, small loans, and the majority of the application for working capitals is about 20,000 euros for both actions. Now, what about this supply? There was maybe a delay initially, but both banks could understand the product and create their banking products and communicate it with their clients. However, until the end of September, and maybe Mr. Dimitrakopoulos has even more recent data, we have approved rather 240 loans amounting to more than 14 million euros, and more of the 70% of that loans asks for no collateral at all. When we ask for collateral, the average is 30% of the capital, compared to 100% that used to be. Now, the interest rates are no higher than 6.5%, and the payment is 98 months, and sometimes we also have a grace period of 6 months. However, those loans are, as we have said, small loans, 30,000 euros on average. Now, this fund, the European, gives a lot of good terms and is doing it very quickly. The farmers do not have to wait to open for an invitation for the improvement plants or for the processing plants in order to receive financing. They can go tomorrow to their bank, receive a loan, and continue with their investment. It is about investments that are not eligible, for example, used infrastructure or livestock, and they help businessmen and farmers mitigate the results that they got from COVID-19. The most important thing is that it brings small farmers and processors, create contacts with the financing system, and creates a financing history that will allow them to receive loans in the future from the banks. Thank you very much.